Today we are talking about Realty Income with its crazy 6% dividend yield and its growth over the last couple of decades to see if it's really still worth it to own this slow growth but good yielding dividend stock. There's a lot of controversy with Realty Income based on its growth, what it's going to do, and so today we're going to break it all down. We're going to do a couple of things, look at the dividend history, the drip calculator, and then we're going to check how much money you would make every single year if you invested $10K into Realty Income for 1, 10, 15, 20, 30 years into the future. So I hope you guys enjoy. If you do like stock content, you are in the right spot. I talk about stocks, dividends, the occasional ETF on here. Let me know what you think. It's the first video on this new channel, so I appreciate you guys for watching. Let's roll the intro. We are on Realty Income's website looking at the portfolio. Now, this is a really key factor when you're looking at a company that is a REIT, a real estate investment trust. And what that means is they own properties. It could be single tenant, multi-tenant. It could be things like shopping malls or places in shopping malls. It could be restaurants, could be vineyards by the looks of it. Any number of locations, and they're paid by the tenants to use their property. And so we see they're diversified. There's a lot of information on the website, and I really recommend you guys go and check out Realty Income's website if you're interested. Looks like they are invested in 90 separate industries. They have over 1,500 different clients and an occupancy rate of 98.7%. And what this means is 98.7% of their properties are currently being filled by tenants. So they are making money on those properties, and that is really, really key. We can also see that they have 15,450 commercial properties under long-term net lease agreements. Long-term is better. Usually you lock them in at specific rates, and it can go up. You can have it all put into a clause in the contract. A lot of interesting stuff. Geographically diversified. Here's the thing. You might say, oh, it's not all over the world. I'm okay with this. I'm okay with the more U.S. focused, maybe a little bit into some European countries, but a more U.S. focused business just because I'm from the U.S. I'm used to it. And you can go through and look at all the really popular clients that they have. You can see all the data on here. They have a full investors page as well. But let's talk about why people are saying that this isn't a good stock anymore. It's kind of come back to life recently. It ran up and then it sold off. On the 5-year chart, it's down 30%, which is a big deal, a very big deal. So why are people saying that it's not a good investment? Well, those that are saying that are typically looking for higher return investments than what Realty Income is likely going to give you. If you average out maybe a 3 to 4% return every year in price with a 6% dividend, you're under 10%, which is not bad by any means. A 10% return over the long term is amazing. But when they're talking about growth, Realty Income is a huge REIT. So if you're really looking for fantastic growth, like from a Tesla or Nvidia, although those have already boomed, if you're looking for something that's going to boom and double over the next 3 to 5 years, Realty Income is really not going to do that. And the reasoning is there's not enough property that they can acquire at their growth rate now because they are so large. So if it was a smaller REIT that had 10 properties and then that REIT purchased 5 more, you're looking at a 50% increase in growth in their property, in their portfolio. And so Realty Income can't do that. There's not enough properties. They don't have enough funding. It's too much work for the company. So it's now just a slow growth, consistent payer. And that's what I'm okay with. With my more conservative style of investing, when I'm more careful in what I'm buying, I'm happy with stuff like this. And Realty Income is one that I have watched for years. It's one of the largest in my portfolio, and I really am pumped with the returns that I've been getting, although it has been a little shaky. I'm not even going to lie to you guys. So we're going to throw up the dividend history and see how much Realty Income has been paying. And remember, this is a monthly payer, and they've increased their dividend for like 25 consecutive years, which is astonishing. When we look at Seeking Alpha, I like to pull this up for all the dividend histories. It shows it chart by chart. We can see that they have been very, very, very consistent. And that's what I like with a long-term stock. I mean, for me, that's what I'm looking for. The dividends have steadily been rising. The price has been average at best. The price needs some work. But this is only the 5-year, of course. This is from the beginning. So since inception, it's up. And we'll check that with the drip calculator. But if we go over here to the dividend scorecard, we can see the 5.83% yield. It's paying out $3.17 a share. So every $55 share that you have, you get paid $3.17 a year. Payout ratio 75%. This is very safe. It's on the lower end for sure. Anything over 90, I usually get a little bit skittish about. And a 5-year growth rate of 3.5%. Now, this is what is key. This 5-year growth rate is low. It's pretty low, and I'm not happy about it, but I understand what this company is doing, what their what the goal is. They want consistent current income. So you're not going to have, like I said, insane returns. You're going to get the return that you're expecting. And that's what's nice for a lot of people. Let's say if you're retired, if you are, just looking for current income to pay certain bills. And that's what I think a lot of investors are looking for currently. So that's good to know. Again, we can zoom out farther and see 2015 it was paying 18 cents. Now it's up to 26 cents. So it's continuing to grow this dividend, albeit little by little. We've seen 2 payments already this month, but the next one's coming in a couple days. So I'm not upset about this. 12 dividends every single year, consistent. We can scroll all the way back down, and there's so much dividend history. Compared to some of the newer stocks, this is nice to just have that dividend history. But let's look at the DRIP calculator, which is really key to look at before we jump into our $10,000 investment calculation into Realty income. On dividendchannel.com, using their DRIP calculator, we'll pull this up. We have Realty income. So it started trading January 3rd of 1995, which is... It's been trading for a long time. So the growth here is really, really interesting to note as well. So we can see start price was $8 a share. Currently, it's $54. So a lot of growth in the share price. And you end up with dividends reinvested. Your total return is just under 4,000%, which is good. Very, very good. And that averages out to an annual total return. So every year, you're getting a 13.11% return. That is the average. And so we're going to use that with our DRIP calculation. So I really, really am happy about that. I think it's solid. A 13% return is, the S&P 500 range is like 8 to 12%. So we're even a little bit above that on the average. In the good years, the S&P does a lot better than that. Like we saw with this year, 28 to 30%. But still, you're consistent with Realty income. And that's why people like this stock. And then we can see with dividends not reinvested, total returns only 1,200%, not even half with DRIP. I'm a huge proponent of DRIP, which is where you reinvest your dividends, for those of you that don't know. And this kind of proves my point with it of why I like it. If you're investing for the long term, I think DRIP is the way to go. Average annual total return without DRIP is only 8.96%. So a big difference there, for over 4% difference return annually, which again, compounding is crazy. So I'm happy with how Realty income has been doing, although it has been a little bit rocky. I'm not going to lie to you. But your $10,000 investment in 1995 would be worth $407,000 today, which is crazy with dividends reinvested. Dividends not reinvested, you're looking at $10,000 turning into $132,000. Again, well less than half, which speaks volumes about DRIP and the power it has. So we're going to run 2 calculations with our reinvestment calculator and show you if Realty income is really worth owning. So I'm starting off on the lower end with just doing the dividend yield. We're not going to include growth. Let's say, some people say it's going to grow really well over the next couple of years. Some say it's going to be a slower grower. Some say it might lose on some of its assets. So we don't know. I'm not going to include growth. We're just going based off the annual dividend yield. So with 183 shares, that's roughly $10,000 invested. You end up getting just about $600 every year in dividend payments. Now, I filled out the dividend calculator on MarketBeat. You can see it's Realty income, individual stock, monthly. DRIP is on because in this scenario, we are seeing how much money we can make, over a certain number of years with this being reinvested, which I think is so key. So again, the smaller yield, we'll do another calculation with a 13% yield, which will be drastically better. But I want to see kind of worst case scenario how this thing is doing. So 1 year, not bad. With that dividend reinvested, you go from $585 a year up to $640 a year, which is decent. If we jump it up to 5 years, now with our 10K investment, after 5 years, you're looking at $13,400, and your total dividends over that period is $3,300, which is phenomenal. And with that additional income that you've made over those 5 years with DRIP on, you are now getting $800 a year in annual dividend income. Now I know it's not a ton of money. And this is where growth is really going to come in to help you, where if you had $100,000, this would be very, very different, but we don't. In this scenario, we have $10,000, but it's still consistent. Just trust me, when we get more and more, put more time in, it really gets worth it. At 10 years invested, your 10K becomes almost $18,000, and you've received $7,700 over the 10 years in dividend payments. So we're almost to the point where we're surpassing our initial investment just in dividends. And our annual dividend income is now $1,080 a year. So $1,000 a year you're making just from holding this stock. which is crazy. The power of investing in the stock market, I'm telling you guys. At 20 years invested, your 10K is now $32,191. You've received $21,600 over the last 20-year period, and your dividend income is now close to $2,000. Now, I like to pull this scenario. Let's say we're going to do 30 years. Let's say that you invest $10,000 into Realty income, and you hold it for 30 years with drip on. You want to just see what money it can make you, the power that it can make you, because money is power, of course. Now, 30 years, you're 25 years old, you invest in a Roth IRA. So we don't have any, I didn't include annual taxes or anything like that. I invest in a Roth IRA myself. So that's why I like to run things. And I'm not including a share increase or decrease. So this is a lower end return for Realty income. So if you're surprised by how low the numbers are, wait until we get to the next one, the next calculation. 30 years, your $10,000 becomes $57,758, and your total dividend payments over those 30 years are $46,000. You've well surpassed your initial investment, and your yield on cost is now 32.8%. Remember that, because you're continually buying this, and your annual dividend income is $3,477, which again, lower than we'd like, but it's still very, very solid. When you're looking at other companies like Johnson & Johnson, Coca-Cola, they pay half this yield. So they may grow a little bit more, but they're probably going to be somewhere around this, I would say, this return. So now we're going to jump into our best case scenario. We're going to average out what Realty income has produced over the last 25, 30 years and use that for our calculator. And I think it's a more realistic look. Let me know what you guys think in the comments, but let's jump right into it. So everything is the same, but we've doubled our yield. And I'm using this number from the drip calculator. It is the average annual return for every year that this stock has been trading on the market. So if you disagree with that, it's okay. That's just what I'm using. That's why I'm using it. Everything else is exactly the same. So we can see after just 1 year at a 13% return, your $10,000 investment has gotten you $1,300. And now your dividend income has kicked up all the way to $1,570, a very good difference. Double, more than double, actually, what we were returning. We start picking it up even more so with the power of compounding monthly. We now, at just 5 years, have nearly doubled our investment. We're from $10,000 to $19,000. Total dividends over those 5 years, $8,560, which is phenomenal. And we can see annual dividend income is all the way to $2,600 now. Again, a little bit smaller. You're not really going to pay the mortgage with this one, but if you had more money in it, you could do absolutely a lot more. And we're not going to pay the mortgage yet. I think we will. I think we will near the end, but let's check out 10 years invested. At 10 years, ending balance from $10,000 goes to $36,400, and you've been paid out almost $25,000 in dividends over those 10 years, which is phenomenal. And now your annual dividend income is $5,000. Now, $5,000 every single year, you could take the money out of Realty Income's dividend and literally just spend it on a nice vacation. A nice vacation for sure, and that's just after 10 years invested. Remember, we're going to continue on this journey. With 20 years invested, it's really going to start to pick up here. So after 20 years, your 10K investment is worth $133,000, a massive difference. And now we're talking some serious dividend income. So your total dividend payments over the 20 years were $115,000, and your annual dividend income now is $18,000. So let's say you have a smaller house. It's nice, but smaller. Your mortgage payment isn't too terribly much. Let's say you bought it at a good time. You got low rates. This could cover your mortgage 100%. 100% this could do it. I am a fan of drip, like I said, so I'm going to keep reinvesting, and we're going to do the same scenario again. Let's say you're 25, you invest 10K into Realty Income, and it consistently pays out that 13% return between the dividend and price appreciation in good years and in bad. What are you going to end up with after 30 years when you want to retire? Well, 10K invested would end up getting you $485,000. And here's where it's key, guys. Your total dividend payments over the 30 years, $450,000, which is insane. But now your annual dividend income is $67,000. So now you can retire. You can retire, and if you're probably making more than $60,000 if you are retiring. Just really depends on your industry, what your job is. A lot of people would be very happy retiring on $66,000 a year, especially let's say you already paid off the cars, you've paid off the mortgage, you want to have vacations and nice dinners and remodel your house, et cetera, et cetera. That's a lot of money to do that. That is a lot of money to do that. All started off with $10,000 because you invested early and used the power of compounding monthly with Realty Income's consistent returns. So I really love Realty Income. Like I said, it's one of my largest holders. Let me know what you guys think in the comments, and don't forget to like and subscribe. Thank you guys so much for watching.